I'm Beth Babich, and I'm here with Omar Diaz today. Would you like to tell us a little bit about your firm?
Again, my name is Omar Diaz. I'm a Managing Director in Investment Banking at Seaport Global Securities. Seaport, we are a 350-person full-service investment banking firm with equity research, fixed income research, sales and trading, and also investment banking capabilities as well.
Wow, okay. So in terms of deal flow, what have you been seeing lately? What are some of the trends and how's that impacting your business?
I think overall deal flow has been very strong over the last several years. If you look at the statistics, in 2017 deal flow has been down, but a large part of that is driven by the fact that a lot of the smart money has sold a lot of their businesses over the last several years. What we are seeing in terms of trends is that yes, deal flow may be down, however, valuations are still at 20-year highs at this point in time, a lot of it driven by scarcity value more than anything else.
And how do you see your clients coping with the valuations, the multiples, that sort of thing? What are you seeing happening there?
There's a huge amount of capital that is flowing through our economy, and so what's happened is there's been definitely a change in terms of risk tolerance. Risk tolerance has overall gone down more than anything else, and that's driven by, hey, we've got record low interest rates, massive amounts of capital sitting at private equity firms, massive amounts of capital sitting at the strategic buyers. We have very high valuations in the equity markets. So these are all trends that have led to lower risk tolerance, which therefore leads to higher multiples and higher prices for sellers.
Okay, and are you seeing any other market trends like larger private equity firms coming down into lower into like the lower middle market, that sort of thing? I mean, that's typically something that we've been hearing. What about you guys?
Yeah, we are definitely seeing that. Well, we're seeing our funds that traditionally, let's say, would do a $500 million deal or a $250 million deal, all of a sudden they're showing up at auctions for $50 million companies and $100 million companies. A typical auction process for let's say a decent, let's call it an industrial business, nowadays we're looking at 150 to 250 potential buyers minimum, and we're easily seeing 30 to 40 first round bids and sometimes up to 15 to 20 letters of intent. So very, very competitive out there.
And how can a potential buyer make themselves more competitive? Is it just based on price? Is it based on expertise? What do you think is kind of some of the strategic advantage these days?
Sure. I think the smart private equity guys, what they're doing is they're really focusing on developing industry expertise, partnering with industry executives, and that's really how you differentiate yourself, is being able to not just be the guy who brings the money to the table, but also being the guy who understands and is able to walk the talk and can sit down with that CEO and really be able to talk about widgets intelligently.
Okay, so it's not great to say that you're sector agnostic anymore. That's not so appealing.
It's it's not as appealing. However, if you're the one with the highest price, a lot of times folks will forget about the fact that you may not be able to, quote, walk the talk. At the end of the day, it's all about relationships. It's how you feel that drives a lot of these decisions. I've seen many a time where you'll have a business owner who will either, one, turn down the highest price, or two, turn down the guy who supposedly has the most expertise and go with whoever they feel most comfortable with.
Very exciting. Anything else you'd like to add in terms of perspectives, thoughts?
Well, let's just hope our economy continues to grow and that taxes hopefully go down, because I think we have a very bright future if all of these things stay in play.
Okay, well, thank you for your time today.
Thank you.